persistent and force central banks to pull away the punch bowl and ruin the party. And I think what people are missing is the fact that the returns have kept going. I mean, if you look at the equity market, as you mentioned, this is not the 1970s in the sense that earnings have done well. Corporate America was really struggling, and it took 9 years in the 70s before Jimmy Carter appointed Paul Volcker and made inflation a top priority. We heard Biden and Harris out recently making inflation a top priority. That's a green light for the Fed, and the market loves that. So you have those two factors of strong corporate performance, strong economic performance, and confidence that in the long run, this inflation is going to be contained and real rates at the back end of the curve staying low. And that's boosting asset prices. That is making this a total return environment.
Robert, are you saying that basically people who are worried about a Fed policy error are just over their skis and the Fed's actually nailing it?
I think the Fed is showing very good balance, and that implies that they have really good odds of nailing this. You're seeing a chair that is focused on the here and now, on getting the jobs back, on having a smooth taper done. If the smooth taper is accomplished, then they have a runway. If they need to raise rates, they can raise rates. And this is a chair, by the way, with the experience of raising rates too fast and crushing the markets and having to chase rates back down. So somebody that would, if they need to hike rates, have some sense of caution about how they need to do that.
Yeah.
At the other end of that table, there's a whole swath of policymakers very anxious, very willing to raise rates to keep inflation in check. So very balanced. I think that's good for them.
Robert, it is fascinating to me that your view is incredibly controversial at a time when Mohamed El-Erian is saying that the Fed is way behind the curve, a view that Bill Dudley, former New York Fed president, agrees with, saying that basically the Fed's going to have to raise rates to upward of 3 to 4% for its neutral rate in order to get things under control. Why do you totally disagree and think the Fed's going to struggle to get to their 2.5% target, let alone anything above that?
Right. Well, I think the thing that people are overemphasizing is the importance of policy. The fact of the matter is the markets work. And part of what's going on here is we've had a very unusual recession where it wasn't a financial overhang, inflated assets. This was rather a policy situation, a terrible disease. People had to stay home. When the people are breaking out, coming out of their homes, economic activity is high. There's none of the economic overhang that you normally have. You're seeing a lot of demand, and prices are adjusting to bring out the supply. They're pushing up real estate prices because there have been changes in preferences there. And there are some disruptions, too, that are obviously aggravating this. But the markets work. And what we've seen in recent years is, yes, there have been fluctuations in inflation, but eventually the global competition, globalization keeps downward pressure on prices. The demographics, aging, overall structurally reduces demand for durable goods. Things level off and things end up going back to not to target inflation, but typically below target inflation. So we've seen that for decades in Japan, in Europe, and now the chairman has seen it for 25 years in the US, a little bit below target. I think that's what they're missing, is that the markets are just working here. And transitory may mean 2-3 years, but the markets have faith in that.
Well, let's talk about the chairman, because, of course, we don't know yet if Jerome Powell will be renominated, if instead someone else, Lael Brainard, for example, will be nominated. We're expecting that decision could come prior to the Thanksgiving holiday. What difference does it make for the markets?
We'll have to find out. But the one recent data point that we have with that was when Janet Yellen was appointed. I think there was an expectation that this is a labor economist, liberal, is going to be very dovish. And instead turned out to be somebody that really did not want to let financial imbalances pick up and took a hawkish bias that was part of the Fed policy that brought us that ultimately below target inflation. So I think while the thinking is now, if President Biden moves away from Jerome Powell and appoints somebody more dovish, that's going to be inflationary in the long run. I wouldn't be too quick to jump to that conclusion.
Robert Tipp, thank you so much with PGIM Fixed Income, and just congratulations on another year. What an interesting battle in bonds. It's amazing, Lisa, to be in this 3-year, and as Ben Laidler says, 4-year bull market that we're going to see. That includes 2022. Who knows? Versus bond returns.
Yeah.
There's no jokes about it. It's brutal.
Although it depends which bonds, right? I mean, the safer the bonds, the worse you've performed. This is sort of the idea of safety has been turned on its head, as you know, in the triple leverage all cash fund. I mean, the idea here is that risk has paid off. And we've seen that paid off, just like Robert Tipp was saying, in the corporate profits, not just policy. And I think that is what's been driving a lot of the dynamism.
Yeah, we'll have to see on that. Futures were up 20, up 12, and right now up 11. Dow futures up 59 as well. And Kaylee Lines, it really goes to the corporate news. And, I've got to go back to Home Depot. I believe it was 1 week ago today or tomorrow, where Home Depot just absolutely crushed it, showing the nominal GDP, the animal spirit of America.
And the renovations continuing in the Keene household as always. But clearly, what we've seen by and large with retailers is that people are out and spending, and it goes back to that Deloitte survey that, Lisa, you were talking about earlier, that, prices are higher, but that just means people are going to spend more this holiday season, not that they're going to buy less.
Yeah, well, we'll have to see. Lisa?
Yeah, no, I mean, this has been the issue that we've seen. Is there going to be a tipping point, of course? And we get that in the data dump on Wednesday. We get some retail sales, which we'll have a lot of fun with.
Yeah, the data dump will be interesting to say the least. What I would suggest, all in all, is it is about claims. It is about a reset of GDP, which I believe goes to 2.2%, still a very quiescent number. But overlaid on inflation, it's really, really something. We make clear we are looking at a number of different stories now, with futures up 11, Dow futures up 59, a 10-year yield 1.57%. Kaylee Lines in for Jonathan Farrow, Lisa Rowitz, and Tom Keith. Stay with us on Bloomberg Radio and Bloomberg Television. Good morning.
With the First Word News, I'm Laura Wright. In suburban Milwaukee, Wisconsin, an SUV has sped through barricades and into a Christmas parade. At least 5 people were killed and more than 40 others injured. Police arrested one person. They are not saying anything about a possible motive. A police officer did fire his gun trying to stop the vehicle. The Kremlin is dismissing U.S. claims that there is a Russian military buildup for a possible invasion of Ukraine. A spokesman says Russian troop movements on its own soil don't pose a threat to anyone. He accused the U.S. of trying to increase tensions with its allegations. The U.S. private equity giant KKR has offered to buy Telecom Italia for $12 billion. The bid is a 46% premium to Friday's close. KKR's offer is likely to be opposed by Telecom Italia's biggest shareholder, Vivendi. The company's shares have lost half their market value in the last 5 years. In Germany, a warning on the coronavirus from Chancellor Angela Merkel. Bloomberg's learned she told officials from her CDU party that the latest surge in infections is worse than anything the country has experienced so far. Merkel said that hospitals would soon be overwhelmed unless the 4th wave of the virus is broken. Donald Trump's former fixer, Michael Cohen, becomes a free man today. He will walk out of federal court in Manhattan after completing a 3-year prison sentence for tax fraud, bank fraud, violations of campaign finance laws, and lying to Congress. Cohen has spent the last few years building a business around attacking his former boss. Now he plans to write another book and host a podcast. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Where's the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector in Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Every day, the Fed is faced with facts that undermine its thesis, or its mischaracterization is the word I like to use better, of inflation. And that's where the political judgment comes in, and that's a political judgment that President Biden needs to make. This is a significant moment for the Federal Reserve.
Mohamed El-Erian of the University of Cambridge, they're talking on the feast of inflation theories for the Fed. We need to talk about the shift from Tuesday to a Monday. It is reported by Jake Sherman at Punchbowl from, quote, multiple sources that we will see the Fed announcement coming up today, some suggesting it could be here within an hour or two, and we're really going to have to fold over here to a study of the Federal Reserve now. Lisa, this is the first indication, again, a simple tweet from Mr. Sherman of an announcement to come today.
The idea here is whether President Biden will reinstate Jerome Powell for another term as Fed chair. Will he go with Lael Brainard? Will he also potentially talk about the other leadership positions that are to be filled at the Federal Reserve? The consensus, Tom, that I can see is not clear whether there's daylight between Powell and Brainard, but if Biden wants consistency, Powell is more tested at a sort of perilous time for Fed communication.
The theme of climate change. Dovetailing all this together, and you get lucky with your booking sometime. Javier Blas joins us right now, Bloomberg's chief energy correspondent. I guess we got to change your title, Javier, to chief energy and inflation correspondent. Javier, I want you to dovetail the stresses of Europe, the ball of special administration in the United Kingdom, the stress of Spain and surging electrical prices, into the stress that we'll hear from the President of the United States today on inflation. Tie that all in together with your energy world.
Well, what we have seen, Tom, is a significant increase in commodity prices all over this year, but particularly over the last 6 months. And that is really fueling the inflation surge, not only in the United States, but across the rest of the world. Certainly, energy is one of the biggest factors with oil prices, gasoline prices. Here in Europe, particularly also with electricity prices. We saw a big spike in power prices at the beginning of October. That really appeared to have gone away for a few weeks, but it's coming back, and prices have gone in very high levels across the United Kingdom, Germany, France, and that is putting a lot of pressure on retail companies in the energy sector. We just saw the collapse of one of the largest companies here in the United Kingdom.
Which you're talking about Bulb, and that's where I wanted to go, Javier. You're basically saying this is the biggest casualty. This is essentially nationalized at this point. What is the political pressure that led to this moment in terms of trying to keep prices low enough that it doesn't cause riots as the months get colder?
Well, in the UK, we have what we call the special administration system for energy companies. That's basically, to put it in simple terms, a too big to fail system for the energy market. You cannot let a company with 1.7 million customers, that's 1.7 million families that depend on it, on electricity and gas, just go past and stop working. So the government steps in, effectively it's a nationalization, and is going to run it. But what we are seeing is massive pressure in Europe with electricity prices reaching the level in which is creating significant political trouble for governments. They are stepping in with aid to families, but we are also seeing more and more movement to cap prices, and that is going to be a problem because prices on the wholesale sector are going to likely to continue going up over the next few months.
Well, Javier, when we think about energy and commodity prices with oil, what the Biden administration and other countries are considering is just release from the strategic reserve, just put more oil out there onto the market. With electricity, you can't necessarily do that. So what is the solution?
Well, the solution is, for once, let the market work. High prices are needed to curb demand. And the other solution is one of the things that we are beginning to see in some countries, like France, is going to be direct support to some families, the poorest families, getting money from the government so they can keep their houses heated through the winter. But at the end of the day, the market is just going to have to make his work, and it's going to be a very painful period for high consumers of electricity.
What we've done this year, Javier, is celebrate the success of your book, The World for Sale. Can't say enough about it, folks, and truly garnering awards internationally. In there, you talk about petrodollars and kleptocrats, and we talk about a central bank or any number of central banks that can deal with a commodity lift. Is there any track record that central bankers can actually do something about a gallon of gas, a barrel of oil?
No, they cannot. The only thing that they can is actually slow down the economy and bring demand down, but they cannot deal with the supply of energy. That is for governments and national oil companies to do. And certainly, if we are thinking about central banks, the only central bank that really matters in the oil market is not the Fed, it's not the European Central Bank, it's not the Bank of England, that's Saudi Arabia. If you want lower oil prices, you need to call to the Saudi Central Bank and ask for more oil. And I'm saying central bank as meaning that the Saudi government plays the role of the central bank in the oil market.
Very good. Javier Blas, thank you so much, and congratulations again on The World for Sale. Lisa Bramlett and Kate Lines with me here is all of a sudden the show and all of economics, finance, and investment shift. Jake Sherman of Punchbowl announcing that he has multiple sources of an announcement today. We are being told the vicinity of this morning, not late this afternoon. We'll have to see how that goes. But here at 8:23 Federal Reserve System time, you have to believe it will be somewhere along the way. And we're thrilled that Matthew Lozzetti of Deutsche Bank will be here to join us to give us immediate perspective. Lisa, this has been widely anticipated, and yet, as many say, it has been a late call.
Yeah, it's been a late call. That's a lot of people to say, look, this is an unforced error. We want stability, a sense of who will be in that seat. And frankly, in the past 4, 8, 12 years, in previous administrations, at this time, you already had a nominee. I will say, Kriti Gupta over at our Bloomberg Markets desk pointing out that we now have the lowest real Fed funds rate in history. As we face this decision. How low can it go at a time when inflation is picking up?
Over the weekend, clearly the idea that Brainerd is governor and Powell is chairman have a very much of a linkage in monetary theory, but shakeup is the right word for it. There's a lot of moving parts here to speak of. Brainerd, of course, out of Wesleyan. and Powell out of Princeton with first-rate undergraduate and graduate degrees, but two very, very different worlds. And really, Kayleigh Lines, that's the heart of the matter. This is the way it's perceived. It's a private equity guy who I guess is getting really high scores for what he's done versus a legit monetary theorist in policy.
Well, I think it's also what kind of policy it is that the Fed should be addressing. That really is the question here. Is it just the dual mandate talking about employment or inflation, or does their mandate need to become something more encompassing of climate, of social-related issues? That is what certain parts of the left think and why they have pushed for someone other than Jerome Powell to indeed take the chairmanship. So it becomes a question of what is the Fed's job at the end of the day, and how does the Biden administration view that?
Out to 4 decimal points, a 10-year yield comes in a little bit, 1.5703%. Equities with an up 20 lift on Standard & Poor's futures now up 10 as well. Please stay with us on Bloomberg, on radio, on television to say kind. It's an eventful Monday. Good morning.
Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg Surveillance. Good morning, everyone. Lisa Bramwell, Kayla Lyons, and Tom Keene. Shaping up to be an eventful Monday again. Jake Sherman over at Punchbowl saying we should see an announcement today. That is from multiple sources, according to Punchbowl. Looking for confirmation from the White House. We do not have that confirmation at this time. We do have confirmation that you get lucky when you speak to smart people, and we do that right now with Matthew Lazzetti of award-winning Deutsche Bank, their chief U.S. economist. And Matt, it was convenient for you to put in a paragraph of your recent note on the Fed composition, the Fed leadership forward. I don't want you to pick Powell or Brainerd, but I do want you to talk about the hawk and dove of those slots to be filled. How abrupt of a shift will the new Federal Open Market Committee be?
Sure. Thanks so much for having me. And I do think that there are differences here, particularly in how Powell versus Brainerd, I think, view the broad-based and inclusive part of the dual mandate. But I think the most important thing for markets and for policy is I think that there will be constraints on how different policy can move in. And those constraints are, one, inflation is high, it will remain high and remain in the driver's seat. And two, even if you do get somewhat more of a dovish shift at the chair, and Brainerd, I think, would represent that, you have a hawkish voting bloc for the committee next year from a regional Fed voter perspective and from a Board of Governors perspective in terms of what we just heard from Governor Waller. So I think it will be most likely continuity either way. We think that the Fed will be raising rates next year either way. And we felt comfortable enough to move our lift off to July next year, even without knowing who the next chair would be.
Professor Clarida at Columbia had to talk about getting it wrong. The arc of your UCLA work and everyone else's is the Bank of Japan really messed this up off the top of my head 15 years ago. Does that pervade the thinking of Brainerd, Powell, and the rest, that they somehow have to be really sure if they speed up the inflation worry and raise rates too soon?
Look, I think no doubt that was the driver of the policy framework review that we got in those results from August. It was a Fed that acknowledged the zero lower bound, the risks of that, the fact that in that world, inflation tends to be below target, inflation expectations tend to dip below target, and that world can lead to this low inflation psychology. I think what we've seen is monetary policy having to be very nimble, very flexible, forward guidance not being able to go as far out in this post-crisis and post-COVID world, because it is different. We've seen obviously inflation running very high. We've seen inflation expectations rising. We've seen a tight labor market on many dimensions, even though the unemployment rate is elevated. And so you've seen a Fed that needs to be quite nimble in their messaging. And certainly we got that last week with Fed officials, both Vice Chair Clarida, Governor Waller, all acknowledging that perhaps they need to speed up the taper less than a month, less than 3 weeks from the November meeting.
Lisa, I want to be clear here at 8:33 a.m. as we all scramble on this one report, that this is still one report from Jake Sherman at Punchbowl. I've seen no other confirmation along the Bloomberg service, the terminal service, and also in the zeitgeist as well.
Of course, regardless of who it is, they face a really difficult terrain here, Matt. And I do want to go to your point of the dual mandate, inflation, full employment. What happens if they don't move at the same schedule? Which takes precedence?
Sure. So I think they won't be moving at the same schedule to a certain extent. They have not been. Inflation was running higher than the Fed, certainly likes, and that was a reason for speeding up taper, bringing the announcement into November, ending by June of this year. And perhaps that would be the story behind why they may be accelerating in the next few months as well. I think as we get into the middle of next year, when we think liftoff will really be contemplated, I think you're very likely to have an unemployment rate that is around 4% and inflation well above target. And so I think that there will be a debate about have we achieved broad-based and inclusive maximum employment at that point. But I do think that inflation is still running well above target, upside inflation risks, inflation expectations being somewhat elevated. I think the story will be we're close enough on the maximum employment objective, and we're so far away on the inflation objective that it makes sense to start the policy tightening cycle.
But the inflation we're talking about, by and large, has been supply side driven, something that monetary policy isn't necessarily equipped to deal with or to solve. So even if we're talking about accelerated pace of tapering, even if we talk about liftoff in mid next year, is it going to make enough of a difference, or will there be further economic fallout beyond the Fed's control?
Sure. So I think initially that was exactly right. This was primarily a supply shock driven story. It was narrowly constrained to those categories at the epicenter of the COVID shock, We had seen used cars, new vehicles. This was the highest since the early 1980s. And so you really have seen a broadening out in terms of price pressures that is being met with very strong consumer demand. So there is an important demand element to this. And inflation expectations have risen, have at least made up the gap that we'd seen since pre-2014, and on some measures are looking more worrying. And so you heard New York Fed President Williams last week, a dove who was talking about trim mean and also inflation expectations looking a little bit more worrying. So I do think that the Fed has a role here. I think monetary policy does have a role here.
Well, I'm glad you brought up consumer demand because obviously it's Black Friday, Cyber Monday week. We're heading into the holiday shopping season. And to this point, it looks like consumers are just willing to pay up more for their Christmas presents or for any other goods that they want to buy. When does that story change?
We thought it would have been changing already. We thought retail sales would be coming off a bit in terms of nominal terms, but the latest data we got there was quite strong again. It's really interesting. If you look at the consumer survey data, like the University of Michigan, consumers have really downbeat expectations about the future, about buying durable goods, about buying cars, about buying houses. There's complaints certainly about the price inflation that we've seen there. And they've already bought a lot in that terms, in real terms. And so we have been expecting the good side to come off, and that would help ease supply chain issues that we've been having. That hasn't happened so far. And so we've been surprised to the upside on consumer durables demand and consumer goods demand. And at least it looks like that's likely to continue over the next several months.
We're speaking with Matthew Luzetti, Deutsche Bank chief U.S. economist, as we await here a potential Fed decision that's expected to come at some point today. That's being reported by Punchbowl News. The idea here is they've waited this long, and finally President Biden is expected to come out and make his announcement. I am wondering, Matt, as we look forward, whether we are looking at a new regime, whether the Fed is going to have to raise rates and accelerate hikes to a point that's beyond what markets are expecting, or if you think that the Fed is well within their range of getting to a neutral Fed funds rate of 2 to 2.5%.
Sure. So I think markets, the interesting dynamic has that they've brought forward in terms of rate hike expectations with nearly 3 priced for next year. But terminal rate pricing has been very subdued, quite low. What I tend to look at there is 5-year, 1-year OIS, and that's only about 1.65%. And so that is a Fed that is going to hike earlier, perhaps a little bit more aggressively than they previously thought, but they're not going to get very far. And that, I think, is feeding into some of the yield curve flattening dynamics that we've seen. And so it's a really interesting dynamic. I think what we should think from a market perspective is Fed forward guidance in this new world just can't go as far as it did in the past world. The economy is far more unpredictable. It's changing a lot faster. We're seeing inflation having picked up, the economy growing faster than expected. And so I think it's a world for markets where the Fed will likely guide to a 2% slightly plus terminal rate. That's our own expectation for a 2.1% terminal rate. But I think we have to be kind of humble in assessing that. And there's a lot of risk, I think, to the market's view that the terminal rate may only be 1.65% at the end of this cycle.
In our modern Federal Open Market Committee analysis, there is modern monetary theory. And over the weekend, this percolated to the extent with the debt buildup from a natural disaster, the pandemic, we are affecting MMT now. Does Chairman Powell or Chairman Brainerd, did they affect MMT in the coming year or 2 or 3?
Sure. So I think what has, in my mind, impacted views about MMT and essentially, should we be spending a lot more from a fiscal perspective and kind of wait for the inflation and the interest rate impact of that to happen? I think we've seen the politics of that become, quite negative. And so we've had an inflation shock. It began in April or May of this year. It is now running on 5 or 6 months. And I think we're already seeing it impact the fiscal discourse that we're seeing. We're seeing it impact the monetary discourse that we're having in Washington. And so I think that there's very clear constraints on how far we can push fiscal stimulus, how far we can push fiscally driven demand in the U.S. economy before it lifts inflation pressures. And then that has feedback onto both our monetary policy decisions and our fiscal policy decisions. And so I think that idea that we can push forward to MMT type world where we have a massive fiscal stimulus on an ongoing basis, has kind of run up against these very natural constraints about the economy and inflation.
This has been well timed. Matthew Lazzetti, thank you so much with Deutsche Bank as he talks about here the new Fed construction, the construction of it tilting towards a hawkish tenor in the coming years. If you're just joining us on Bloomberg Radio and on Bloomberg Television, the zeitgeist this morning was tomorrow. The president jetting off to Nantucket for a Thanksgiving family gathering. It's not tomorrow, Lisa Abramowitz. It is today. And of course, Jake Sherman out at Punch Bowl suggesting that. And it seems to be we'll see something this morning.
Yeah, that's the reporting out of there. Just to be clear, though, it's not exactly early, right? I mean, maybe it's earlier than the expectation of tomorrow's speech, but this is not exactly an early appointment, and people have been waiting for this for a long time. Right now, it does seem like perhaps people do not necessarily know who it's going to be, but we are not seeing any market movement on this time, which I think is interesting.
Well, the market movement, let me do that down to 4 digits. We do have the yield coming in a little bit. We had a 1.57XX, and we're now down to a lower yield, 1.5685. We did have a Chicago Fed activity index of a certain buoyancy here at 8:30, but clearly here, as you mentioned, Lisa, it is a stasis in the market.
Yeah, we'll talk more about the potential implications for a decision here in Washington, D.C. Kathy Jones will be joining us coming up, Chief Fixed Income Strategist of Schwab. Tom, it'll be interesting to see how people really, how much they care about who really is the next Fed chair. Stick with us. We will cover that for you. This is Bloomberg Surveillance.
With the First Word News, I'm Laura Wright. Over in the US, President Joe Biden will give a speech on the economy and the fight against inflation tomorrow. Markets are waiting on the president's decision on the next Federal Reserve chair and possible moves to bring down energy prices. The White House has said the announcement on the Fed will come before Thursday. A Christmas parade near Milwaukee, Wisconsin turned into a scene of horror. An SUV broke through barricades and into a crowd, killing at least 5 people and injuring more than 40 others. Police say they have a person of interest in custody. One police officer fired his gun trying to stop the vehicle. Amazon co-founder Jeff Bezos is donating $100 million to Barack Obama's foundation. That's according to Puck News, an online news site. The Bezos donation is the largest gift the Obama Foundation has ever received. Bezos is the world's 2nd richest person. Bloomberg has learned that energy drink maker Monster Beverage is exploring a combination with Constellation Brands, the brewer of Corona beer. Monster, which has Coca-Cola as a major shareholder, has a market value of $47 billion. Constellation is valued at $44 billion. The exact structure of the potential deal is not known. Pfizer says that its vaccine proved 100% effective against coronavirus in 12 to 15-year-olds. Pfizer and its partner BioNTech are reporting results from a longer-term analysis of a phase 3 trial. The data is being submitted to regulators in the US and elsewhere as the companies seek full approval of the shot. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
As we make our way into the holiday season and the new year, please don't forget $2 trillion of cash on the sidelines in consumers' wallets. You watch for Christmas. It's going to be stronger than feared, and a Fed that will stay easy for longer and longer than feared. Too early to be worried. Let's enjoy our eggnog.
Linda Dussel, Federated there, a constructive view on inflation and what it means for this economy forward. We welcome all of you as we are on watch for the announcement by the President of the United States over a new chairman of the Federal Reserve System, of course, centered on the present chairman, Mr. Powell, and Governor Brainerd as well. We're going to give you coverage of this through the morning, but right now we want to speak on the boom economy that the future Fed will confront. Part of that, of course, is rising prices and inflation. We go to the consumer now, and we're fortunate to bring you Dana Telsey, Chief Executive Officer, Chief Research Officer at Telsey Advisory Group. Dana, your optimism this year has been an act of God. Your shop has said, forget the gloom, things are good out there. How good is it out there for the American consumer right now for Chairman Powell or Chairman Brainerd?
It is a very good holiday season that's upcoming for the consumer in 2021. We have consumers who basically have the dollars to spend. Retailers are giving them innovative products. They've got to shop early because supply chain obstacles are really a headwind this year. But overall, the dollars are there for consumers to spend. And this is going to be the first Thanksgiving we've had in nearly 2 years that families can gather together. So I think we're going to see the theme of Christmas is celebratory. It'll be a celebratory holiday season in 2021.
Can they pass price increases on to consumers? What's the evidence that you and Joe Feldman see?
The evidence that Joe and I see is that they can. And we're seeing it in all categories, whether it's in home goods, whether it's in clothing, whether it's in accessories. Price increases are there. It can be low single digits of around 3%, and it is being passed on. The consumer wants the goods. They've got the money to spend. And I've seen it in the sales results of the retailers, from department stores like Macy's, from off-price retailers like TJX, from accessory companies like Tapestry and Capri with Michael Kors and Coach. And even cosmetics companies like Estee Lauder. We're seeing price increases being accepted.
How universally are they being accepted? Is there a two-tier acceptance of higher prices of the low-income earners and the high-income earners as we start to see the likes of Walmart and even Target say those price pressures are actually becoming more of an issue for them?
So I think the price pressures overall, there's cost headwinds in terms of labor, but then passing it on to the consumer. Even companies like Bath and Body Works have raised their promotional prices and they're not seeing obstacles. Now, if this continues, and trees don't grow to the sky, so this is a point in time that you're able to see this, but I think it's something to watch carefully. We've had some on the low end said they have to navigate those price increases carefully in order to figure out what is the level of resistance. So it is a moment in time now that you're seeing it be accepted, but carefully managed.
Dana, there's a theory out there that when people start to have to pay their paychecks and use those to pay for the higher input prices, that they are more discerning in terms of what they are willing to pay. They're basically using the money they still have received from the government to buy things. Is that true? Are you seeing the same dynamic playing out, that basically there is a limited amount of time that this acceptance will work for?
Child tax credits are expected to go through the end of the year. So certainly as we head into 2022 for spring and Easter, that's something we're going to be watching carefully to see is there a headwind that's going to be there. Keep in mind that we still have four hire signs at so many different businesses. Mm-hmm. The demand for labor is high, so consumers can get a job if they choose to. We'll have to see as this child tax credit runs out. And frankly, we're not going to be in a holiday season then if you're going to be able to pass through the same amount of increases. We do have inflationary pressures, and it's cotton also in terms of raw materials.
Dana, let's go back to the sell side and all of your heritage on the street. What's the Telsey single best buy for next year?
I think overall, when I think about what's going to work in 2022, I think we're going to see companies like Levi Strauss, in terms of denim, work well, given back to work can mean a more casual attire also. I think we're going to see new business models emerge. Look at companies like Figs, who's providing scrubs for the healthcare profession, which is one of the fastest growing professions out there. And when we think of other types of business, look at off-price, TJX, Burlington, Ross Stores. Traffic goes to the off-pricers.
Very good. Dana Telsey, thank you so much. Telsey Advisory Group this morning. What is so interesting is if you want to get to Naples, Italy, you take American JFK through to Madrid and then off to Naples. We grabbed them. We forced them off the road with police escort on the way to JFK this morning, and we are thrilled to interrupt his trip to Capri. John Farrow steps in here as we await a new Fed chairman as well. What's even better about this, folks, is Farrow, if I came in unshaven like that, John, I'd go to the timeout chair. You are styling it this morning.
That's off about 40 minutes ago, Tom. I was in the gym watching Christmas with the Cranks on a big screen, just relaxing.
Yeah, but the difference is you're working out, John. I'm in the gym doing nothing. John, very seriously here, we roll over here finally to an announcement. And let's review this right now. You've been out front on saying they're late.
Yeah, and Punchbowl reporting just moments ago, Tom, that the Fed chair announcement could be as early as 9 o'clock, so perhaps 7 minutes away. Tom, what this will come down to, I think, and we've talked about it over the last several weeks, continuity and confirmability. Do you want to make a change at the top of the Federal Reserve at what looks like an inflection point for monetary policy? We'll discuss that through the next several hours. And confirmability, whoever it is, whether it's Fed Chair Jay Powell for another term, Governor Brainerd for a first term, this one's going to be a really contentious one down in D.C., Tom, when we go to those hearings.
And what we have, Lisa, which is great, is we're going to have really intelligent conversation on this, linking this decision into the markets. It is about economics, finance, and investment.
And arguably, it's never been more important, both for the economy as well as markets, for the Fed to get this right. I mean, this is probably one of the most polarizing moments for Fed decisions that anyone has seen in history. history, and it comes at an incredibly uncertain time for inflation.
Right. And of course, what's so important here is on the short list for some of the other slots. John, I have got to admit, after what I observed yesterday, I think Coach Conte here, he's good to have one of those open seats on the Fed right now. You were not in earlier today, John, to look at that second half resurrection
just beautiful.
Of the tots.
That was classic Antonio Conte. Can you imagine if we had a Fed hawk like Antonio Conte at the FOMC meetings, Tom, just getting everyone revved up for a Federal Reserve decision?
He came out on the field and raised up his arms and got the
I think we came close to that on Friday, Tom, when we heard from Governor Waller and Vice Chair Clarida. For me, that was getting us ramped up for a December decision at the Federal Reserve. And real speculation now about a discussion, a debate about accelerating a taper.
I tried to do soccer talk with Lisa.
And did that work out? Did that go all right?
It still is burning on the floor.
It so went down of it. John, why don't you take us out as we get ready for a special hour of Bloomberg surveillance?
Where are futures? Up 15 on the S&P, up about 1/3 of 1%.
Really going to rub it in?
Seriously.
I like the beard, John.
That futures up 64.
I think the beard should be
up
a
about
permanent.
0.4%.
I think you missed us.
It's the first time I've looked, Lisa. Yields up 3 basis points. 10s, 157.54. Don't let the beard be a distraction. There's a little bit of grey coming through as well, Lisa. I actually quite like it, to be honest with you. From New York City this morning, a very good morning to you. Special coverage coming right up. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
think that financial markets will discover what normal looks like from a growth and an inflation standpoint.
Corporations, their fundamentals cannot be better, and inflation is really not disrupting that.
You're looking at a very strong trajectory for growth over the next several years.
I think the concerns about inflation are going to be a 2022 story.
The uncertainty band is wide.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. Breaking news, the President of the United States to nominate Chairman Powell to a second term as Fed Chair, to nominate Governor Brainerd as Fed Vice Chair. That news coming from the White House in the last few seconds. That news this morning, the President of the United States to nominate Chairman Powell to a second term as the Fed Chair. From New York City, alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Farrow. Your equity market up 0.4%. Tom Keene, the Chairman, getting a second term. At least he's been nominated for one. This one goes to the hearings.
The market looks like it likes it, up 15 on futures, now up 20, John, still moving higher. And the yield was from a 156 and change out to 158.05.
Elisa, it's a split. The president nominating Chairman Powell to a second term. Governor Brainerd, nominated as Fed Vice Chair.
Yeah, the idea here, going with the status quo in the sense of trying to have continuity at one of the most perilous times, some people would say, for Fed policy, possibly in history, based on how low rates are and how high inflation is.
This is about two things, Tom Keene. Continuity, one, and confirmability, two. We can talk about continuity at an important inflection point for monetary policy. We need to talk about confirmability as well. Perhaps that's shaping the decision down in Washington, D.C.
And a focal point, John, here, and we're going to have a wonderful set of guests this hour. We welcome all of you on Bloomberg Radio and Bloomberg Television, this special hour of Bloomberg Surveillance. What Michael McKee and I know, there's been other times where we've had reappointments, maybe without that focus. I went back and looked at Bush Greenspan the fourth or fifth time, and it wasn't really that big a deal. Why is this a big deal, Michael McKee, this time?
Well, we've gone into a different kind of world, Tom, in terms of monetary policy, things that Alan Greenspan never had to contend with, never had to consider with the quantitative easing, with quantitative tightening, with all the things that the Fed has done to expand its balance sheet, the zero bound. There's a lot going on for the Fed, and it has become front and center in the United States as people have decided the Federal Reserve is the economic savior for the country, also the economic whipping boy. Jay Powell gets to play both roles in this case.
Let's talk about this bond market move as well, guys. Up 5 basis points on a 2-year, up about 4 basis points on 10s, 159 on 10s right now, up to about 56 basis points on 2s. Mike, we can talk about confirmability in a moment. I want to talk about continuity. And for this Federal Reserve chair, staring down some data that is incompatible with an argument that he's made through much of this year, and his vice chair, Rich Clarida, now set to be replaced, Governor Waller, both of them making a move in the last week to talk about accelerating the taper. When we think about the first job of this chairman, before we even see if he gets confirmed for a second term, walk me through the complexities of that through the next couple of months.
Well, when the Fed announced that it was going to start tapering, it said it would have a $15 billion a month taper for November and December, but did not put any numbers on January going forward, leaving themselves some room to try to have the ability to change. And it does look like they're getting set for a change now, as we're hearing from more and more members of the Fed. Rich Clarida will be on the board for the December 15th meeting. And so we could expect the Fed maybe to start maybe raise the amount that it cuts the buying by on the 15th, and that then would be a reason you would see maybe the markets moving a little bit, because they figure that Jay Powell is going to be much more on board than that than necessarily Lael Brainerd would have been.
One of the conundrums heading into next year is the dual mandate, the idea of trying to combat runaway inflation or even higher inflation than they'd like, while allowing employment to get to a fuller picture. What happens if you have one, say high inflation, without the other? And how does the distinction of a Powell versus a Brainerd Fed weigh in on this?
Well, what the Fed has said is they will look at both of the mandates and they will basically do risk management on whichever one seems to be the worst. Their focus is on trying to get unemployment down, but if inflation starts to become more of a hazard and unemployment doesn't look like it's going to immediately drop, then they would attack unemployment. They're hoping in this case that unemployment is, to use the T word, transitory. It will take longer to disappear, inflation, but it will start to fall back. And that's the general consensus on Wall Street as well. In that case, they don't have to make a decision between the two. But tapering faster gets them to the point where they can raise rates if they need to more quickly.
If you are just tuning in, for our audience worldwide on TV and radio, the President of the United States nominating Chairman Powell to a second term as the Fed chair, nominating Governor Brainard as Fed vice chair. This all according to the White House in the last couple of moments. Let's get some market reaction for you from Kathy Jones of Schwab. She joins us. Kathy, great to catch up with you. Your first reaction, please.
I think this is a don't rock the boat move. It's consistent with the long history at the Fed. Usually Fed chairs are renominated, and it looks like probably there was a thought at the White House that this fighting a battle perhaps over Brainard was not worth a fight worth having at this stage of the game.
Kathy, let's talk about the move in this bond market. 10-year yields up 4 basis points, pushing 160 again. The more interesting move for me is pushing 60 basis points to the front end on twos, up by 5 basis points to 56. Early days, knee-jerk reaction maybe, but Kathy, what's your initial response to seeing that kind of move off the back of this decision?
Yeah, clearly the market is looking at the likelihood that the Fed will increase the rate of tapering and move up the timing of the first rate hike now that Powell has been renominated and you've kind of cleared the decks in terms of policy, decision making going forward. And I think that that's a reasonable expectation given some of the comments that we've heard from various officials and the fact that inflation has been higher and more persistent than expected. The Fed really shouldn't have any reason to be buying bonds at this stage of the game. It's not really contributing much, and it could be doing some harm. So the faster they taper, the better news it is in terms of getting the inflation picture under control.
Kathy Jones with us here right now, and Alan Blinder is scheduled to be with us here in moments. Kathy, I look at the bond market, I look at all the uncertainties forward, and what we see without question is a wall of savings, of liquidity, a buoyant holiday season for the consumer as well. What is the Schwab call on the American consumer next year that Chairman Powell and Vice Chairman Brainard will confront?
Yeah, we're pretty optimistic about the consumer. There's high levels of savings. The job market is very strong. Wages are rising, particularly for lower income workers. All those are really positive for the consumer. Obviously, it's going to be something of a constraint if energy prices stay high because that's a particular pain point for consumers. But by and large, consumers are in good shape. So we're looking for that to continue to drive the economy going forward.
Kathy, stay close for the market action. Your 2-year yield this morning up by 5 basis points. I want to head down to D.C. and catch up with Bloomberg's Anne-Marie Horden, our Washington correspondent. Anne-Marie, this is also about confirmability. Can these decisions actually be realized? Take a listen to that famous quote from Senator Warren in the last couple of months on what she thinks of this chairman.
I can't support Jay Powell for renomination. So my view is he ends his term, we put somebody else in place, and I think the Fed is going to be better off, and I think our economy is going to be safer.
Senator Warren, Anne-Marie, called him a dangerous man. This president going against the wishes of some of these Democrats. Can you walk me through, just set the stage, frame it for us, what the next couple of months could look like trying to make this happen?
Well, the progressives are certainly waking up, probably unhappy with this decision, like Senator Warren, who did call Jay Powell a dangerous man. But also on Friday, Senator White House coming out with a statement as well. They wanted a new pick at the top. But Jonathan, as you say, this is about being able to get through that Senate confirmation. Jay Powell was confirmed 84-13 in 2014. Many of those people are still in the Senate that are going to be able to push forward. He has bipartisan support. Many credit him to being able to bring the U.S. economy out of the pandemic. And then you look at Brainard in 2014, she received 61-31. So you already see from their previous nominations and Senate confirmations that Chair Powell had a much easier time in the Senate. So that's potentially part of the decision making. Also, he was able to remain with going with Chair Powell, he was able to have this continuity at the top of the Fed, where his predecessor, Trump, decided to get rid of Janet Yellen and elevate Powell. Now, this is something that he likely is going to tout, that he wanted to make sure that the Fed remains independent. At the same time, he's giving a nod to the progressives by making sure Governor Brainard gets a top spot, and she is.
Yeah, but Anne-Marie, do we have a sense of what the main hang-up President Biden had with just renominating Jay Powell, say, a month or two ago?
It's unclear, but potentially part of it is the fact that there's not just these positions. They have a number of other positions as well at the Fed. So they were probably likely looking at how they would rework the Fed to make it more diverse, to look a little bit more like America. That is something you've heard time and time again Democrats campaign for. So potentially that was part of it. And then when you had these two top selections, Brainard and Powell, then you started to hear and are reporting that you had senators wanting to sit down with each of them. And this is where the counting game probably came in for the White House, to make sure that these two individuals can be confirmed.
Anne-Marie, down in D.C., our Washington correspondent, sticking with us through this morning on the back of this news. Tom Keene, let's build on the price action. Up at the front end, yields are higher by 5 basis points. Clear read for the FX market, TK. That dollar stronger.
Well, the dollar's stronger, and I think that's an immovable force here into the new year, John. I think, everybody's doing the outlooks and that, and they'll all readapt and adjust off of this. And there's this, the confirmation process and that. John, the dollar's the global system, and it is a vote today for what President Biden did.
A 96 handle on the DXY, the Bloomberg Dollar Index, Lisa, a broader read of that US dollar. More broadly, it's stronger.
The idea that if they raise rates, that will end up leading to a money flight into the United States. I do wonder, though, is Chair Powell, so much more hawkish than Lael Brainard? Or is he going to have a rather dovish tilt as he tries to wait for the employment market to really pick up?
Tom, as you think about the history of the Federal Reserve, I'm with Lisa. I just think on these two nominees, whether it would have been Chairman Brainard or Chairman Powell for a second term, how much daylight was there between the two? What I think this opens the door to is a much cleaner conversation about what took place on Friday. Off the back of those discussions about accelerating the taper, now we can have a real conversation, not about a lame duck chairman in December, but a conversation, Tom, about pushing things forward and maybe pushing things forward a little bit more quickly.
I think they will be data dependent, John. I understand the parlor game of taper in rate rise and Matt Luzetti on with Deutsche Bank. They're July-ish now, I should say, on some form of rate move. But, John, to me, it's a boom American economy. Frankly, the comments of Dana Telsey on the American consumer are just as important as Matt Luzetti of Deutsche Bank.
To what extent, though, Lisa, right now, are they data dependent? Are they going back to being forecast dependent? Because everything I hear from them is about the future. In the future, this will happen. If we were truly data dependent and we were looking at the data right now, we'd be saying things are stickier, they're broader, and maybe we were really quite wrong about our forecast of what would happen with inflation through the year.
And the employment market perhaps is a bit hotter than we previously expected. You raised a really good point, John. The idea that Fed Vice Chair Rich Clarida basically talked Friday about accelerating the taper, and we did not see any real material reaction in markets. And I was surprised by that today. You raised the point, people dismiss that as not necessarily being as relevant with new leadership. Well, now all of a sudden that has new relevance.
It becomes a much more real conversation, doesn't it? If you're just tuning in for our audience worldwide on TV and radio, Tom Keene, we have a decision from the President of the United States to nominate Chairman Powell to a second term as Fed chair.
We all knew this was coming. They came to me a couple weeks ago and they said, who do you want to speak to? And I said, there's only one voice that matters, and that is Alan Blinder, Princeton University, and the former vice chair. Alan Blinder, it was a different time, a different place. You know more than anyone on the planet what it's like when a chairman and a vice chairman don't get along. You and Chairman Greenspan collegially battled at your time at the Fed. That's not the case now. How will this vice chair assist this chairman?
Well, I think perfectly, as she has been as from her seat as governor. It's the same table. She'll have a new title, a better, a higher title. But on monetary policy, as I think Jonathan said a few moments ago, there's been no distance between the two of them. This is pure, either way, if Lael Brainard had become a chair, there'd be no discontinuity in monetary policy, and there certainly is not going to be any conflict on monetary policy between Chair Powell and Vice Chair Brainard. If there's any disagreement, and there probably will be, it'll be on regulatory policy. By the way, that's the way it was mostly between Greenspan and myself way back in ancient history.
Explain, now that the rules have changed, on the linkage of a monetary and fiscal policy, what the voice will be for this new team as this nation tackles trillions of dollars of new debt.
Well, you know, the Federal Reserve, this comes back to your taper question that the three of you were just talking about. The Federal Reserve has been buying quite a bit of the newly issued debt, which smooths the way, obviously, for issuance of large amounts of federal debt. That's going to continue, but at a diminished rate. And I actually I'm part of the school of thought that says they ought to be tapering faster. But let's remember, tapering does not mean withdrawing. It just means easing off the gas pedal. And that's why I think it's an appropriate thing for the Fed to be doing right now. You know, there are these vaguest hints. The Clarida discussion was just mentioned that the Fed is thinking that way also. We'll see. But I think they should. And I don't see that, coming back to your previous question, as a point of contention between Powell and Brainerd at all.
Just want to bring you some news, Lisa, just very quickly. 1:20 Eastern Time. We will hear from the President of the United States, Lisa. We'll also hear from the Chair and the Vice Chair. The nominations for both Chairman Powell and Governor Brainerd also delivering remarks a little bit later. That's 1:20 Eastern Time. So we'll hear from all three perhaps a little bit later.
And in the meantime, certain comments are already rolling in from the leadership of the Senate. We do get Senator Sherrod Brown, chair of the Senate Committee on Banking, Housing, and Urban Affairs, coming out and seeming to endorse Fed Chair Jay Powell, saying that he led our economy through a historic pandemic. And under his and President Biden's leadership, unemployment has fallen and workers are seeing increased bargaining power. Alan, when we look forward, what is the biggest risk in your view for the Federal Reserve, moving too quickly or waiting too long to raise rates?
I think it's probably waiting too long, but I can understand the wait. I thought you were leading up to a slightly different question. I was going to say, I think the biggest risk that the Fed, it's weighing on the Fed right now, is whether we're going to get another wave of COVID infections coming over from Europe, as has happened several times in the past. If that happens, we're going to get kicked down the staircase again, and we're going to be looking at the Fed to help us get up. And I think that's the main reason why they're not anxious to lift off on interest rates. That's slightly separate question from the taper. The taper is pressing on the gas pedal at a time when it's really not appropriate. The liftoff is when you start tapping the brakes a bit. They're not ready to do that, and I think this big risk of the disease is a major reason for that.
Alan, given what we've heard from Germany this morning and from Europe over the last couple of weeks, I think a lot of people might agree with you. Tom, let's just frame the president's next 24 hours. Just think about this. We're expecting some comments from the president tomorrow about lowering prices, and today he's going to stand alongside Chair Powell and Governor Brainerd to talk about what exactly? The future, stable prices, lower prices. You put those two events together, and Tom, they're pretty interesting, aren't they, going into the Thanksgiving holiday?
No, it's the dynamics. It's just simply, John, the into the holidays, I'll take your point on this, John, but what I see here is all new inequality as well. I mean, there's the haves and the have-nots. There's a partition, John Farrell, within our society, and that's what they have to confront.
Mike McKee, 1:20 Eastern Time. We'll get some comments from the President of the United States on this, and we'll hear from Chairman Powell and Governor Brainerd. Mike, what are you looking for from those comments a little bit later this afternoon?
Well, it's kind of interesting because the president has already scheduled a talk on the economy and inflation for tomorrow, so I'm not sure how much he wants to step on that, but apparently he does want to introduce his two new leaders for the Fed, and we'll probably talk about inflation. That is the key element in the statement the White House put out. The president is quoted as saying that he appreciates the focus of Chair Powell and Lael Brainerd on inflation and on jobs. jobs on full employment, putting inflation as his first priority. So one can assume he's going to try to deal with that both today and tomorrow. I wouldn't expect a whole lot from Jay Powell and Lael Brainerd as nominees. You don't want to get out ahead of the Senate. You want to save anything that could end up being a controversial comment until then. They'll thank him and say they're here to help the economy move forward.
I see now Alan Blinder's still with us, the former vice chairman of the Federal Reserve and at Princeton. Alan, there was a point long ago and far away where a Federal Reserve chairman was contained. Not only Chairman Powell, but others have changed that rule book for the time of Greenspan, Blinder as well. How will the second term of Powell be different? How does he cast the day-to-day, the press conference to press conference differently reappointed?
I think that's completely dependent on the state of the economy. Right now, as several of you have just correctly said, inflation is popping up as the main problem facing the Fed, which hasn't been true for years. Like, oh, maybe I should say decades. I mean, it's been a long time since the Fed chair, or the FOMC more broadly, is really concerned about high inflation, but now they are. And so I think for that reason alone, you'll see a different tone of rhetoric coming out over the coming months. And eventually, everybody's guessing when, a liftoff on interest rates to try to slow things down a bit and counter the inflationary surge.
That guessing game continues this morning with your 2-year, your 5-year, the yields on both at the highs of 2021, Lisa, off the back of this decision. Some comments from Secretary Yellen, the former Fed chair, of course, saying she's pleased with Powell Brainerd nominations. It will continue to support a strong Federal Reserve. Kathy Jones of Schwab still with us. Kathy, thanks for staying patient and staying close. I want to bring you into the conversation again. We will hear at 1:20 from all three, from the president, from the chair, and from the would-be vice chair. Let's see how the nominations goes and how that works out down in D.C. But when you hear from Governor Brainerd and Chairman Powell a little bit later, Kathy, just walk me through your thoughts on this, what you're looking for specifically after we just heard on Friday from Governor Brainerd, from Governor Waller, rather, and Vice Chair Clarida, that maybe we should think about going quicker.
Yeah, I think the emphasis, to the extent that they get into policy discussions at all, will be on the inflation problem that's currently front and center right now. We know that Powell's been pretty dovish, as has Brainerd, but I think that because of the optics of this and inflation being the big concern for not only the Fed, but for the administration, that's where we're going to hear probably the most interesting comments. I don't know that Powell's going to tip his hand and talk about timing of liftoff or changing and tapering or any of those details, but I think the emphasis will likely be on the Fed is very much aware of the inflation threat in front of us and wants to balance that against allowing for a full recovery in the economy.
Kathy, how difficult will it be for Fed Chair Jay Powell and Lael Brainerd, the announced potential vice chair, to come out and remain independent and portray a deeply independent streak as President Biden talks extensively about the need to control inflation?
Yeah, I don't see that as a huge problem. I think that people will read their comments the way they want to read them from a political perspective. But keep in mind, Brainerd has been at the Fed for many, many years. Powell now has several years under his belt as chair. I think that they can point to their policy moves pre-Biden administration as underscoring their independence, their ability to work through one administration or one political regime or another.
Kathy, what about the dual mandate here of inflation and full employment? Which takes precedence as we head into next year, given the fact that so much emphasis has been placed on Lael Brainerd putting more of a focus on employment than Chair Powell?
Yeah, I would say Powell has also put a big focus on employment. He has been, fully on board with the idea of a broad and inclusive job market. Obviously, it's going to be a very, very difficult task because we're in a very unusual circumstance right now with inflation popping up, but still having, a significant number of people not back at work and wages rising. But I think the shift now will be towards inflation and less so on the job market.
Got to do a couple of things this morning. Work out the reaction in the price action in the markets and then work out the reaction down in Washington, D.C. The reaction in the markets is pretty clear. Yields up at the front end by 6 basis points. Now, for a 2-year yield, a 6 basis point move, that's a pretty sizable move, back towards 57, approaching 60. As 2-year yields start to inch higher, you get some dollar strength coming through. The dollar index at 96.42, up by 0.4%. That's a stronger dollar. Your equity market hanging in there, up 17 points, advancing 1/3% on the NASDAQ, up 0.4%. So that's how we're set up in a price action in the markets off the back of this decision. Here's a statement from the President of the United States. America needs steady, independent, and effective leadership at the Federal Reserve. That's why I will nominate Jerome Powell for a second term as chair of the Board of Governors of the Federal Reserve System, and Dr. Lael Brainard to serve as vice chair of the Board of Governors. There is a ton of reaction in D.C. off the back of this. I want to bring in our Washington correspondent down in Washington, Anne-Marie Hordern. Anne-Marie, we talked about this now for weeks. A lot of people put out statements ahead of time saying, this is who I want to support, this is who I'm against. Walk me through the reaction of the last 25 minutes or so.
Well, first, let's point to the reaction of the Treasury Secretary Janet Yellen, a former chair herself. Remember, in the summer, she had said to the president, I think you should continue with the second term for Fed Chair Powell, and she is right now congratulating them. She's also grateful. She says that the president nominated Dr. Brainard to serve as vice chair, saying that she's a respected economist with years of experience and instrumental in the nation's recovery. So Yellen has her pick, and I always thought it would be very interesting if the president was to go against his own Treasury pick in terms of who he's going to renominate. And then we heard from Sherrod Brown on the renomination of Powell for Fed, and it looks like what he is saying is that this is going to be a pretty simple confirmation process. Remember, he is the first line of defense in that hearing that's going to happen in order to get the president's picks through. And he is saying he's looking forward to working with both these individuals.
Anne-Marie, what do you make of the fact that independent was mentioned extensively by pretty much every comment that's come out of the Biden administration and beyond? Basically, this is the takeaway at a time when inflation is so much in the forefront of the political agenda.
Yeah, 2 points. The first is going to be on inflation. We have heard the president time and time again when he's touting his economic agenda. It's no longer about the social programs or the bridges. It is about the fact that his economic agenda is going to clamp down inflation. You look at the latest CBS poll, more than 60% of Americans think the economy isn't doing well because of inflation. So he wants to make sure that he is remaining at the middle of this recovery, that there is continuity at the Fed, and they're not going to be questioned about what happens with inflation because he kept the same horse in the race, so to speak. If he were to elevate Brainard, and inflation does run extremely hot, potentially Biden down the road could have been bashed for that. The second thing, of course, is that his predecessor decided to take a different stand. Since the 50s, for the most part, presidents continued, regardless of whether or not as Republican or Democrat, that was the chair, they continued with maintaining that continuity at the Fed. And he is likely trying to point out that even though Jerome Powell is a known Republican, he has bipartisan support, and that he wants to maintain that tradition when new presidents come in of keeping the Fed chair at the top spot. Again, though, a nod to the progressives, because there is an elevation for Dr. Brainard.
Anne-Marie Hordern in Washington. We're going to continue here. Michael McKee with us, of course, with all of his experience in international economics. Michael McKee, how will this be greeted abroad? There's such a set of different challenges for banks. Does the emerging market structure that is so challenged right now, do they need a Chairman Powell?
I wouldn't put it as a need at Chairman Powell, but it will help them to have continuity because they know what to expect. Always better to know what you're dealing with instead of trying to figure out how somebody is going to behave going forward. And in this case, the U.S. dollar is going to remain strong, and the U.S. is going to be the strongest economy. So emerging markets situation isn't going to change a whole lot.
And John, this is critical in equities, in bonds, in commodities. Guess what? The story this morning is the dollar reaction.
Yeah, off the back of this move at the front end, Tom, I just can't get away from it. Mike McKee, a 6 basis point move on a 2-year. That's hard to ignore, approaching 60 basis points at about 57. What's your read on that, Mike? That lift at the front end off the back of this decision 27, 28 minutes ago?
Well, if I had an accurate read, I'd be a very wealthy man and I wouldn't be here. But my guess, looking at what's happening and looking at the notes from people, that basically it's sort of a relief trade of people who think that Powell is a little bit more hawkish than Brainard, and the continuity will keep the Fed going. And with the talk of speeding up taper, all those things kind of combine into one. And people who were holding back have now done a little bit of a trade. I'm wondering, though, how long it lasts. It may be somewhat knee-jerk. And remember, we get a whole bunch of data on Wednesday ahead of the Thanksgiving holiday here in the United States, and I suspect that will have a very big impact on where rates are.
John will be in Capri by then.
Yeah, hopefully I'll make that flight, TK. For anyone just tuning in, there is someone that is paid to do this far better than Mike McKee and I. It's Bob Michael at JP Morgan Asset Management, the CIO of Global Fixed Income. Bob, let's just start with a move in the bond market off the back of this decision. Yields up, yields higher. Your response, sir?
Yeah, I think Mike McKee is right. This is a knee-jerk reaction. Powell's been reappointed. I think the market is assuming we're on track for 2 rate hikes next year, but overall, fairly moderate Fed going forward.
What's the biggest knee-jerk reaction that you see as a mispricing, Bob? The idea of a 5-year going out to nearly 1.3%, or the 2-year going out and rising 6 basis points?
You know, Lisa, I don't really think there is a mispricing here. I think this is the central case that the markets expected, that Powell would be reappointed. You would have Brainerd as vice chair. You have a very dovish package in there. I think what you have to look at are risk assets, and credit is doing well. Equities obviously had a nice bounce. You've got a Fed in place for the next several years that's going to be very patient and tentative about normalizing.
And Lisa, as you get the opening bell, equities are heading in one
They were
direction.
clapping for the new, the reappointment.
Equities are up, Lisa. Equities are up 0.4%, even with that move, Lisa, in the bond market and this prospect of tighter monetary policy.
That's exactly where I wanted to go, Bob. Is this basically giving a green light to the Federal Reserve to raise rates in the middle of next year and follow it up with another rate hike, just as the market seems to be pricing in?
Well, I think there's a lot to go between where we are today and a year from now. I think certainly there hasn't been a tremendous amount of pushback on a rate hike or 2 next year. I wouldn't be surprised if there was some sort of commitment from Powell to the administration to be very cautious about the normalizing process and be sure that there are sufficient growth and inflationary pressures. We're seeing them now. Will that continue for an entire year through they get through the tapering process and then start to raise rates? We think so, but let's wait and see.
Well, Michael, JP Morgan with arguably the essay of the weekend, trying to game out our future on inflation. And what it comes down to for our viewers and listeners is a tip point on the 10-year yield. Where in your head is the critical level of 10-year yield where things change?
Oh, I think north of 2%. I think there's a lot of clear space between here and 2%. I think the debate as we go into 2022 will be how high can the Fed get the Fed funds rate, and then the yield curve will start to flatten out around there. 2% seems like a pretty good stopping point. Build in a slight term premium, call the band 2 to 2.25%. I think we get there over the next several months.
Over the next several months, we hit an important and emotional point. What's the experience of JP Morgan on what that will do to issuance, to the dynamics of the market that we don't look at each and every day?
Well, you should see issuance continue to come at a very high rate. When we talk to borrowers, they're cognizant of the fact that growth and inflation are picking up, that the Fed will begin to lift rates, that their funding rate will go up. So they're starting to put in place additional amounts of long-term funding at what they feel are secularly low rates.
We are with Bob Michael at JP Morgan Asset Management, the CIO of Global Fixed Income. Off the back of this decision from the White House, the President of the United States to nominate Chairman Powell to a second term of the Federal Reserve and elevate Governor Brainerd potentially to Fed Vice Chair. The reaction in the market's pretty clear. Yields higher through the curve, particularly at the front end of the curve. That means a stronger dollar. And at this equity market open, up by about 22 on the S&P, advancing 0.5%. If you break down the sector price action, there is a big tilt higher in the financials. The banks, Lisa, ripping. The financials up 0.9% off the back of this bond market move.
And this really speaks to the idea that banks hinge particularly on that front end rate that gives them more net interest income. What is interesting, if you look at the yield curve, it is flattening. If you look at, for example, the gap between 5-year and 30-year treasuries, it is actually the narrowest it's been since March of 2020. So long term, this is perhaps a more dampening effect on longer term inflation expectations and yields.
Bob Michael, Michael, December 15th, when the Federal Reserve meets and we get a news conference. I've got no idea when the hearings are. What are you looking for around that time, at a time when the Fed chair is looking to get confirmed for a second term?
Well, we've been talking about that, and it looks as though the reappointment process, since he's the current sitting Fed chair, could take no more than 2 months. I would expect very dovish rhetoric coming out of the Federal Reserve between now and, say, mid-January until the reappointment has gone through Congress.
So, Bob, what do you think of that now with Vice Chair Clarida potentially just unleashed? He can say whatever he wants to say. He made a move on Friday to talk about maybe we need to discuss the taper pace. Governor Waller's already out there saying the same thing. How do you bat that away in the middle of December?
You know what? I love hearing to the former FOMC officials. They're so candid and unlike anything we've seen when they've been sitting. But you know what? It doesn't really matter. You have a reappointed chair, you have a new vice chair, and the vote will coalesce around them going forward.
Do you think it compromises the December 15th decision? Bob, the way you see things right now, they're going to have a new set of forecasts, a new dot plot. Those forecasts have got to be adjusted for the incoming inflation data. Do you think it compromises that meeting?
I don't think it will. I think that the expectation for that meeting all along has been, boy, we can't wait to see the dot plot. I wonder where those will be. But because they've just begun the tapering process, all the commentary and rhetoric around it will still be somewhat dovish. That, you know, things could still be transitory. They don't want to rush into starting the rate hike cycle. Those are two distinct and separate things until a lot of the lost unemployment has been recovered.
Extending beyond futures, John, what I see here is SPX up 27 points, Dow up 156 points, even the VIX coming in with a vengeance. Michael McKee with us, along with some wonderful guests to come in the next 25 minutes. Michael McKee, the market votes.
The market is voting, and as Lisa mentioned, an interesting move for banks going higher. That is probably because Lael Brainerd was not chosen as the vice chair for supervision. She was seen as a tough regulator on the banks, which means that the next 3 appointments that President Biden still has to make could be quite important and could be definitely sort of signed to the left wing of his party that he is hearing their concerns. We might actually get a tougher bank regulator. You look at the nominee for the controller of the currency and you think the Biden administration doesn't have any problem with being tough on banks. So perhaps celebrating that too early might be a mistake. Elizabeth Warren is probably going to like whoever gets chosen as vice chair of supervision. And there are 2 other seats. So the president still has 3 seats and no indication of when we're going to see those.
So, Mike, looking at the banks in particular, there is this question about the yield curve contracting and that typically being negative for the banks. We are seeing that to some degree, whereas a lot of their income does hinge on the front end. Do you really think that the regulatory backdrop is so material right now for the banks, given the Fed's role?
Not at the moment. And as Bob was just saying, I think a lot of the reaction we see in the markets is knee-jerk. The regulatory issues will be more important as we go down the road, but front and center for markets, both in fixed income and equities and also in currencies, is going to be how soon the Fed raises rates, how strong the U.S. economy is. And while the Fed may wait a while to raise rates, the guessing game is already underway, and every piece of data is going to feed into that. And higher rates at the long end, in a sense, will be good for the banking system, but the concomitant part of that is that if you have higher rates and it slows down business, it may slow down lending. So there's some good and bad ahead for people who are trying to trade banks.
Mike McKee on the composition, the potential composition of this FOMC, a fantastic lineup through the next 20 minutes. We'll hear from Priya Misra, Eric Friedman, we'll hear from Danny Blanchflower too on this decision from this White House. I've got one final question for Bob Michael at JP Morgan Asset Management. Bob, for the people just tuning in, to put you on the spot, if you had to bet for next year, 0 hikes, 1, 2 or more, Bob Michael, what would you be going with right now?
2 hikes, September and December.
Bottom line, simple, easy. Bob Michael, good to catch up, sir. Thanks for logging on and catching up with us very quickly after that decision. We appreciate it. Bob Michael there of JP Morgan Asset Management. Lisa, Bob Michael, looking for 2.
Yeah, well, market right now consensus is for 2 questions, just as when. July or June even being potentially where it is. Honestly, how much discussion is there about accelerating the taper, especially with Fed Vice Chair Rich Clarida unleashed?
Chairman Powell nominated for a second term by this White House. Governor Brainerd nominated to be elevated from governor to Fed Vice Chair. That decision coming 38 minutes ago. Happy to say that joining us now is Priya Misra of TD Securities. Priya, yields higher up 5 basis points on 2s, 4 basis points on 10s. We fade just a little bit. Can I get your early reaction to that decision from 40 minutes ago?
Sure. Thanks, John. So, yeah, I think the market was pricing in 40% chance of Brainerd. So as that's been taken down, I think the market is putting higher rates in that front end with a view that Governor Brainerd was likely to be more dovish, was more likely to be ideologically waiting for the labor market to recover fully. So I think the market's pricing in that, I think the idea that there will be continuity, but Chair Powell might be stepping away from this idea that the labor market needs to fully heal. But I will flag that this talk around accelerated taper, and let's see from the minutes, I think it's way too early for the Fed to be talking about accelerating taper. Maybe we see that in the minutes. I think that's also playing into this because if they accelerate taper, they can hike much sooner. The market now is pricing in the first hike in June of 22. So that tells you that it's the combination of, I think, Chair Powell getting renominated, plus now you have 3 Fed officials talking about an accelerating taper. So it's the combination of the 2.
Priya, Jean Boivin with the Bank of Canada and now at BlackRock, and really truly a first-rate economic mind out of Princeton, with Blinder, I should say. And Jean Boivin says, we're getting this wrong. It's not an inflation watch. It's an employment watch. Your call is on the edge. You are the outlier call, Priya Misra. Fold in the unemployment and wage growth dynamics to your call that this is a Fed that will wait and wait.
Right. So our economists do have the Fed not hiking until well into 2023, largely because of that labor market point. Because we do expect people to, over time, there are frictions in the labor market, and so it hasn't happened so far, but through the course of next year, for people to return to the labor market. And that's going to put downward pressure on wage inflation. And ultimately, we think that CPI or PCE, so inflation numbers, are not sustained if you don't have wage inflation. Because, ultimately it's going to hurt growth and consumption when that purchasing power is not there. So I do think it's about the labor market. And if we see a fiscal drag next year, we see people coming back. So there's this hidden slack in the labor market that starts to show up. Then the Fed will, I think, be vindicated or at least those on the Fed who are arguing to let it run hot will be vindicated in the fact that inflation's likely to come off and there's no urgency for the Fed to hike. But it is going to come down, yes, to that labor market. Do we see people return, or was COVID such a structural shock to the system that people have left permanently? I think that's really the big question for the next 6 months.
Priya, all in all, your call again is you're just incredibly against what's going on now. The calls that are out there, the worries, as John gamed out, tapering and rate rises and such. What do they misestimate? What is the thing in this November, the time of outlooks? What is consensus most getting wrong?
I think it's a couple of things. It's an idea that the Fed is under pressure on the inflation front, that they won't be able to withstand month after month of high inflation prints. And this is where I'd say the new Fed officials coming in, or Governor Brainerd as the new vice chair, assuming all these get confirmed, I think that's going to be important. Can they withstand that pressure? And even if Chair Powell might be taking a tiny step back, saying, maybe we need to reassess policy or we need to be humble, I think so the market may be misinterpreting how quickly the Fed caves under inflation. I think that's part of it. And part of it is fiscal drag. I think the assumption is that the high savings of the consumer will be enough to offset fiscal drag. But when we look at the composition of savings, much of the savings is actually the top 1%. And so, when the fiscal drag is felt by the rest of the economy, we think it's going to impact growth. It's going to impact that goods to service consumption shift that everyone's looking for. And savings may not be enough. And maybe people want precautionary savings because we're in a world where there's a lot of uncertainty out there. So that might be misunderstood as well.
Priya, always feel lucky to catch up with you, particularly this morning off the back of this decision. Priya Misra there of TD Securities, as we learned that the President of the United States is nominating Chairman Powell for a second term at the top of the Fed and looking to elevate Governor Brainerd from governor to vice chair of the Federal Reserve. That decision coming about 43 minutes ago. You will hear from all three potentially at 1:20 Eastern time when we hear from the President of the United States. Get that one in the diary, 1:20 Eastern. The President of the United States, Chairman Powell, Governor Brainerd, 1:20 Eastern time. We'll take that in full on Bloomberg TV and radio. We talked a lot, Tom, about this move in the bond market. Let's talk about the move in the equity market. All-time highs on the S&P, record highs on the NASDAQ.
John, the NASDAQ 100 is a great story. The three of us on surveillance 12 months ago were listening to the death of technology. John Golub of Credit Suisse really and courageously pushed against that. But, John, I'll tell you, Dow up 17%, maybe Boeing induced, Standard & Poor's up 26%. John, I wasn't aware till this morning, year to date, NASDAQ 100 is outpacing the Standard & Poor's 500. That's a vote for technology and growth in America.
Just a massive move, Tom. You're right to point it out. I'm pleased to say that joining us now is Eric Friedman, the Chief Investment Officer at U.S. Bank Asset Management. Eric, at times like this, it's difficult to distinguish between a knee-jerk reaction, a move that might not last 5 minutes, and a move that might be a little bit more durable. How do you do that on a morning like this morning, Eric?
Hey, Jonathan, good morning. Thanks so much for having me on. I think your point is well taken. I would say that some of the movement in both the financial sector plus small caps this morning is a reverse of what we saw the past, let's call it 6-7 trading sessions. Those were the spots of the market that were really under relative pressure. And so I think that part of today's, let's call it sigh of relief, if you will, from the reopening trade is the idea that we will have some continuity. So I would say that our viewpoint remains the glass is half full. Clearly, this is a Fed that's not going to be as much transition as markets perhaps thought as early, I should say, as late as Friday, Saturday of this weekend. So Brainerd was certainly viewed as a transitional pick. And perhaps what this means, Jonathan, is that this is the administration saying, you know what, let's keep an olive branch, if you will, towards the other side of the aisle and having a continuity with Chair Powell. We, of course, have midterms, which are less than 12 months away. So continuity is really the word of the day, but we still think this continues that glass half full mentality we've been talking about with clients.
Eric, Jim Bianco of Bianco Research messages in pointing out that the market now has 3 full rate hikes priced in for all of next year, beginning in June, with a 79% chance of a rate hike, and then going on from there. Even May has a significant probability put around it. What would happen in equities if this rates market is correct?
I think, Lisa, it's something that we look at June as probably being that transitional month. We think that May is probably a bit early, and you've done a great job as a team covering the tapering dynamics. So for us, it's really more about the terminal level. And I'm just, again, so enthusiastic to listen to Tom's consistent message about terminal cash flow discounting. So in other words, if the market is wrong, and that terminal rate is going to be higher than 1.5, 1.75%, that's an equity market that has to reprice lower. So for us, we think that the initial wave of liftoff, if you will, that can be whether it's June, whether that's the July 27th meeting. Those are okay in the market's eyes. But I think that what would be a really challenging outcome for markets, Lisa, would be if the Fed starts talking up a higher terminal rate that's not priced in right now.
Right now, what kind of data would we need to see, would the Fed need to see to start to move up or signal that ultimate Fed funds rate would end at a much higher rate than the market's expecting?
Lisa, with a Powell-driven Fed, employment data is going to be just mission critical. He has gone out of his way to signal that is That's the marker he's paying most close attention to. So if we see labor force participation pick up, if we see people move away from the sidelines and actually into the market, but also into the jobs market, but then also into a more widespread set of jobs, that would be the critical level that we think would be the signal, if you will, that Chair Powell says, you know what, we thought the labor market would be stubborn. They're not, and we may have to raise rates faster as well as higher.
Eric Friedman, thank you so much for joining us this morning. Greatly appreciated as well. Joining us now from Dartmouth College, of course, a gentleman who has sat with the Bank of England and is definitive on our monetary theory, our employment, and our wages. David Blanchflower joins us this morning. Professor Blanchflower, thank you so much. Sure. What this comes down to, and Jean Boivin, you know, of the Bank of Canada, and I believe a team that lost to Dartmouth in Ivy League football this weekend from Princeton as well. Yay. Jean Boivin made very clear this is about jobs. That is your wheelhouse. Should Chairman Powell and Vice Chairman Brainerd, should they fear wage growth?
No, I don't think they should fear it. I mean, we've seen so little wage growth in the last 50 years, so I don't think they should fear it. But I've listened to all the commentary going on. I think these appointments make sense. I think Powell has said something which I really agree with, and everyone seems to have missed, which is the Fed is sitting, waiting, and watching, and could move in either direction. And I think much of what I've been listening to is guessonomics. It really depends upon how this economy moves, what long-run changes in behavior there are, and what happens to the virus when cases are rising. So I think the answer is that the market's got well ahead of itself, just as it did at the Bank of England, and we'll see what happens to adjustments in the labor market. I mean, people have been retiring, people have been leaving, and part of it, I think, is temporary because of the virus. Obviously, people's 401ks have risen, but we really don't know what these market reactions are going to be, especially in the labor market. So I think the market's entirely got ahead of itself.
Yeah.
It really depends on what's coming. I mean, I understand that, you know, if this, then the answer comes. But bank presidents coming out saying, you know, we should be tightening the 3 rate rises coming in 2022. Well, that's for the birds. I mean, we
Danny, they've always got to deal with that. You know what it was like at the Bank of England for you. Forgive me, Danny, because we have to keep it pretty short. And what we'll do is we'll rebook you and have a longer conversation. But just a final word on this. How do you remain patient? How do you communicate this, that you're willing to wait with inflation with a 6 handle? How would you do that? How would you guide it?
I would say that we have seen recent rises in inflation. It's not the Fed's job to respond to every single month. The question is, what happens 18 months ahead? And we don't exactly know that. We're going to sit and wait and see if this pattern repeats itself. And I think Powell has really been spot on where he kind of pushed against we're just raising, where he said there's possibilities in the other direction. So I think the answer is the quick question, is this stuff going to get repeated? And are we going to see rises in 2020? If we do, then you have to respond. But if you don't, and oil prices are falling, the world container index is falling, and the Baltic Dry is falling, if those things continue, the path will be very different to what the market says. And remember, markets got it completely wrong in 08 as well.
Danny, always appreciate catching up with you. I know you've got a tight schedule as well this morning, so thank you, sir. Danny Blanchflower there of Dartmouth. Mike McKee, on to 1:20 Eastern Time when we hear from the President, Governor Brainerd and Chairman Powell. What are you looking for, sir?
I think one of the key questions will be if he says anything about the other 3 seats that he has to fill, and it gives us any kind of indication, because they will, as I mentioned earlier, probably be a little bit more to the left of Jay Powell. And the Powell and Brainerd aren't going to probably say a lot at this particular meeting because of their confirmation hearings coming up. But the president is likely to also emphasize inflation in the mandate for the Fed as opposed to jobs, which will be an interesting contrast with the way Jay Powell's been running things.
Mike, I actually said this to the vice chairman nominee once. I take immense issue with people that say she is not as acute as the monetary heavyweight. She's PhD out of Harvard. She's an incredibly adept and supple mind, of course, with a policy derivative. Explain the difference between a monetary heavyweight like Clarida Gertler, 1994, is one example, and the policy prescription approach of Brainerd. What's the Clarida-Brainerd distinction?
Well, Brainerd has spent her career doing more in terms of policy and how economics fits with policy and what various policies mean for the economy, whereas a Rich Clarida, Mark Gertler types are academic economists who work on models and look at various aspects of the economy independent of policy and try to figure out what moves the economy forward. So there is a distinction there, but you're right. Lael Brainerd does have a long history as working in economics on the policy side, and she does have that economics PhD from Harvard.
It has taken a while to make this decision. The president has finally made it this morning. 52 minutes ago, nominated Chairman Powell to a second term as Fed chair. Down in D.C., our Washington correspondent, Anne-Marie, before the president runs away for Thanksgiving. A little bit more still to do.
Going to also be speaking alongside both of his two nominees. And as Mike says, we're going to be looking out for what they have to say on inflation, which has really just taken the entire administration's complete captivity, given the fact that now when the president goes out and touts his economic agenda, it's about making sure they're easing those inflationary concerns. And then that's just not all he's going to have to say. Tomorrow he's having a speech specifically on inflation. Likely this comes on the heels of a CBS poll saying that this is what everyday Americans are worried about, and it comes down for them when it comes to gasoline prices. So I imagine today he's going to be touting that, but it's going to be a tricky balance, right? Because he doesn't want to be showing the Fed what he wants them to do. Remember, how many times have we heard in these statements this morning that is independent? Former President Trump a number of times took to Twitter saying that the Fed was naive for not cutting interest rates sooner. He'd want to make sure he separates himself from what he wants an independent Fed.
AMH, thank you. A Washington correspondent down in D.C. Your day set up as follows on Bloomberg TV and on Bloomberg Radio. Alex Steele and Guy Johnson running you through the opening hours of the session here in the United States and guiding you towards 1:20 Eastern Time when we hear from the President of the United States, Chairman Powell, and Governor Brainerd. Tom Keene, 1:20 Eastern Time, and special coverage right here on Bloomberg TV and Radio.
It is not political, John, and it's not constitutional, but it's something we do best. We transfer power. We take our institutions seriously and try to do it in a process that sets us apart, I truly feel, John, from every other nation. The nomination process, there'll be some moments, it'll be fractious, I get that. But nobody transfers power here with a reappointment of the central banker to the world like the United States.
TK, what do you make of this move in the bond market? Let's run through it together. 2-year yields up 5 basis points, 10's up 4, 2's at 55, a stronger dollar, an equity market just off all-time highs.
Yeah, what we do, folks, is when John's talking, I'm here looking at what Tottenham's doing, and when I'm talking, he's trying to figure out where to travel after this show today, and as he interrupts his 1 week off. And John, what I'm really doing is I'm looking at the real yield and the duration comparison. And the 5-year real yield, John, right now is at a breakout. It's right up against resistance to a lesser negative number. And I would watch the 5-year real yield as you look across all of the bond space.
Tom, we go from 120 potentially towards the confirmation hearings and this big decision on December 15th, the middle of December.
Yes,
the new forecast, the new dot plot. What do you think the tone of that news conference is going to be like, given what we've learned this morning?
You are dead on about the importance of December 15th and the economic data Wednesday versus this nomination process. It's far more important, the active data starting with Wednesday.
TK, shall I keep the beard?
I would keep the beard. I feel, you know, it's just destined.
I'll keep it if you grow out yours. How's that for a decision? No, you don't fancy it? From New York City this morning, good morning to you all, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. I'll head back to the airport. This is Bloomberg.
So I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. If you do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you'll use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Brzezinski.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFaul.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
even though Putin denies any wrongdoing,
U.S. election.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say, 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission.
And several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is open, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits at different wavelengths. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.